Hey, what's going on, guys? This is MC Fire coming at you again with another breakdown of the said markets. We are looking at February the 25th, Tuesday, and what we're coming at you guys with is, as usual, the in plays and some things that we're looking at long term on the radar. If you guys don't already know this, but the market outlook has been seriously pessimistic. And all we want to do is give you guys a couple plays and what to watch out for and what to look for. So, in the instance of the overall market, right? You got the cues here, um, with highs being 539 and a pullback relative to the highs of around down to 519, right? So everyone's kind of like freaking out, like, hey, is this gonna be a new recession? Warren Buffett's sitting on like some like obscene amount of billions of cash because he can't find a good company right now. And I would say, well, yes, we've been talking about on this channel that stocks have been overvalued for a very, very, very long time. But just so you know, that doesn't mean that just because something is not overvalued for a long time, that it can't continue to drift upward. And what do I mean by that? Most people don't realize that, like, when you look back in 2008 and you look at real estate, for example, the real estate market actually didn't, the crash happened in 2008, but the real estate market had was overvalued for a very, very, very long time, probably like 5 years. Right, the crash actually started in 2002, 2003. Most people don't realize that the real estate market ballooned over the course of years before it actually crashed. That happened. So sorry. That actually happens. Very similar in the stock market as well. Now, it happens a lot faster once things get overvalued, but they can be overvalued for a very hot minute. Even Elon Musk's, I remember one time he tweeted that, hey, my stock is overvalued. I don't know why people keep buying it. It's clearly overvalued why people buy it. And that day that he put that tweet out, I think Tesla ran like $40. It was insane. So what does that mean? It means that people have no problem buying things that are overvalued. They have no problem letting you know that they want to be along for the ride. Now, the only difference nowadays is, this is why I'm bringing Walmart to the front of the classroom now, as it's on here, is that they don't have any money. So because people don't have any money, and what do I mean by that? Uh, I'm not saying that like uh, it's a simple fact that the data is showing that a lot of us live paycheck to paycheck. A lot of people are struggling financially, can't put in a emergency account of more than $1,000, things of that nature, right? And that's the kind of the state that not just America's in, but the kind of the world is in, right? You're seeing inflation in some places, deflation in others, mass layoffs, all this other stuff. So I encourage you to look at the financial data and make sure that you're prepared. And what does that mean to be prepared? Be prepared by an emergency fund. The best thing that you can do, or the single best thing that I have found that works, that actually absolutely works, there's only two things: it's downsizing, having a second skill, right? If you're a white collar worker, have a blue collar skill. If you're a blue collar worker, have a white collar skill. And that's a skill that 90% of people fail, and then keep developing that. So you need a good skill, man. You need a good skill. Okay. Those are the only two things that work. Be prepared and have another way that you can earn income. Downsize. Really, downsizing is effective because you're taking a lot of stress, you're taking a lot of pressure off yourselves. So if that's getting a cheaper car or getting a smaller house, definitely do that. People say budget or whatever, but it's going to be extremely hard to budget if prices go up for the things that you need, like food, like gas. So that's why I say downsizing your lifestyle, getting rid of debt, downsizing any credit cards or excess spending, that would be advised. And you're seeing that data really come out from places like Walmart that just put out and said, hey, we're seeing a change in the type of consumer that's coming in. Now, granted, Walmart has a terrific run when you contrast that compared to somebody like Target. Uh, Target, not so hot. Why? Because it's bougie Walmart. And if I can go to Walmart, I can get something for cheaper. And if I'm affluent and I can go to Walmart, I can just do, pick up, where I don't have to actually go in the store. I just buy it online kind of thing. So that's what we're hearing from places like Walmart, right? So just something to watch out for. There is a setup on Walmart, but I wanted to kind of put that out there that this is the avenue, one of the best avenues that I've seen for wealth creation, and I stand by that. If you look at the stock market, and if everyone else is hurting, but the people that are holding, let's say the Qs or the SPY, or whatever asset class has just been steadily rising throughout all that pain, that's just something to think about. Where's all the money going? Like, it's got to go somewhere. If you don't have it, somebody does have it, right? During COVID, we printed billions of dollars and it was circulated. So where did all that money go? That's the real question. I'll leave that to you. There's a lot of answers, but nothing that we have time to cover here. So UNP is in play. He got a nice rip, slight pullback here, but as you can see, as we laid out here, it's kind of showing a trend channel down. So that's our trend, right? We're not looking for necessarily a traditional like rip to the upside, even though we have the alert there. It's just the alert is actually there to see if it goes trend, right? We believe that it actually will break ranks and go to the downside like it's been doing, right? Being choppy. Because the reason why I put the alert there is because, okay, if we go and bring it to the front of the classroom, after earnings pull back into the moving average cloud. So instead of it completing that to the downside just yet, it respected it. It respected it. So if it goes back up, we could be seeing a new trend develop to the upside here on Union Pacific. So shout out to it. UNH, we've talked about UNH pretty extensively, especially with this trade reversion to the mean that could be set into the works again here. So you're seeing, if you have a buy bias on something like UNH, this red candle, if it crosses above that, that's all you would need for a trigger potentially back to the 8-period moving average. Up here, if this is your 8-period moving average, you can expect to go about halfway before you have to pull that trigger, unless it absolutely rips. The 8-period moving average is kind of where we want to pull that play off at the first sign of danger if you're making a decision there. Target, we've been talking about Target. It actually did put in a outsized candle here, and the beautiful thing about the outsized candle is it's followed by an outsized red candle. So if you're looking for a reversion to the 8-period moving average, that definitely could be likely. I mean, it even sets in, like you see it here, it pushes, and then even it kind of peekaboos up there before it fails again. So you get an opportunity to let that thing go proper. We do have another play here. Now, you know what we say when in doubt, 21 out. Well, the 21-period moving average is to the upside. So I'm going to have to change the characteristics of this one to the downs, from the downside to the upside. Seeing that earnings is already in the rearview mirror. It's already posted earnings, and we're going to go ahead and put a alert to the upside since there's a little red doji there. We like this look to the upside for SRE. Again, massive pullback, and then you get to see that trend never really manifested to make lower lows. It actually broke, and this is a pretty nice setup to the upside if we can get that break in SRE. So definitely watch out for SRE to the upside. I'm going to keep this alert here, but I foresee SRE to the upside if we can get that break. SPG, Simon Property Group. This one that we've had on our radar. We've been telling you guys about Simon Property Group for a hot minute. Back at highs again. So shout out to Simon Property Group amongst others. We've been steadily talking about Simon Property Group considerably. So not going to beat that. But essentially you've got a kind of a blowout or a retest, what I call a retest of this high here, or this pivot level. because it broke below, retested. Now it's probably likely to fail back to the 8. So if you're a day trader, I would watch a break below 183.88 and taking it down to 180 for a couple bucks. Yeah, Sherwin-Williams. That play is definitely in the works here. So we're kind of sitting on it. If we can break below the low of that candle there. This is actually in play. Excuse me. It's actually triggered below the low of this candle right here on the 19th. So this candle right here on the 19th triggered below the low and a retest of that level, and you're already getting a push down. That is very powerful, right? Sherwin-Williams, I mean, you get almost like triple confirmation there. So you could look to take SHW, and I would definitely look to take SRE with a break to the upside. So really just classical, beautiful price action there. And let's see how expensive these things are. They're not that even that expensive. We might actually execute that trade here. So if you look at it, let's say just 21 days here, we go down, see how much these bad boys cost. You've got a put, right? Put, you get maybe 4 or 5 of these bad boys. And get them to the downside for Sherwin, which makes sense, right? And the overall trend of like Sherwin-Williams does paint, right? So if no one's building houses, the impact is going to be considerable, right? Unbalanced volumes red, 21-period moving average down. You got a break retest. You got a green candle that's pretty much got washed. So and you got a squeeze that fired off technically, right? Technically fired off. So if it hasn't already, I think it's already. It's saying bid and ask is, I think we should be fine. We'll watch it going into the open, see what it does, right? We'll get through the rest of these. PSA, same thing. You guys pretty much can see the setup. At this point, you guys should know kind of what we're doing. Publix, it makes sense. If you got a storage unit and people are short on cash, that extra stuff that you're already not using, don't already need, it's probably going to fall by the wayside. And you're kind of seeing that reflected in the market. Philip Morris, blowout candle there. No need to stress. Nike, good old Nike, gonna go uptrend. So consumer spending might be picking up a little bit in certain niches. So keep that in mind. But I believe that this is gonna be I believe this is going to be just overextended, and then you could potentially take a play to the downside. If the overall trend for things that we don't need is that we're going to stop buying them, then stuff like Nike, you have to watch that. Morgan Stanley, shout out to Morgan Stanley. We're gonna walk our alert down as it continues to drop. If we see an uptick there, we can catch it slipping. But then you have a problem, right? You have this level at 135.88 gonna be a major issue if you do see that rip. So something to keep in mind and watch out for. Marathon. You got Marathon here looking to catch that to the upside here. New uptrend, but the 21-period moving average is still kind of sloping down. So watch out for that. It's a mixed bag, but when in doubt, 21 out. Hopefully we can get a play to the upside here on energy. Overall, that would be sweet. Nothing there. This one, yeah, we like this. Nice rip here, and in a very, very pronounced downtrend with very juicy setup candles. So MDLZ to the downside for sure if we can get that. Lows here. Nice rip to the downside again. It's been on the radar with Home Depot. We could bring that to the front as well. Home Depot rip to the downside, and it really tanked here right around earnings. So Home Depot and Lowe's taking absolute beating. Then you've got Goldman Sachs, very similar story to what we saw in Morgan. Nice setup candles here after a very nice thrust that we saw upwards in XLF. So we took advantage of that. Okay, nothing really there. Kind of blowout candle. Nothing really there. More blowout candle. More blowout candle. CEG. Okay, CEG, Constellation Energy, right? Nice setups in energy. So if we can start to get a push they're going to start rowing together. That's kind of the overarching theme. Once you start seeing multiple names on the list giving you the same kind of setup, then they could start rowing together. Could be an overall shift in the sentiment for that sector. You got uh, Berkshire Hathaway really pushing to the upside now, and this is while they're sitting on cash. So they're doing this without stock buybacks, mind you. Now BlackRock, watch out for BlackRock to the downside. Actually, you probably should get that trigger in today because it already broke below the low of this green candle. 1, 2, 3, 4, just there on the edge. We got unbalanced volume still. It's in no man's land. 21's neutral, so keep that in mind for BlackRock. AMGN, trend change, wait for a pullback, and then you got some bondies yield. Very nice push to the upside, and there's your open. So we're gonna see. First message that came across our desk is, oh, you've got some Bitcoin below a certain level. Oh, below a certain level. Let's go look at that. And then there's our SRE, right? So there's your O below a certain level, and then SRE. We'll go ahead and set that up to put that trade. Ooh. SRE, massive dump, massive dump, massive dump. Well, again, you could be wrong. Earnings, man, I can't stop it. Look at that earnings. Oh my gosh, look at that, absolutely massive. I mean, it fell off a cliff. 17% down. 17%, guys. The premiums on this thing's got to be absolutely stupid. Let's go. Let's go Sherwin-Williams, see what it's doing. But yeah, SRE just absolutely tanked. That's insane. We get a decent risk reward for Sherwin-Williams. We'll risk it for the biscuit for Sherwin-Williams. SHW. So go ahead and line up Sherwin-Williams to the downside here. About 24 days out, taking a ask. We'll go ahead and buy this put option, and against it we'll do. Why is the delta negative? Very interesting. Got a negative. Oh, because it is negative. Sorry. I kid, I joke. 430. What is that right now? 436. Gotta move $6. It's 54 or 36. Yeah, that should be fine. I don't want to get too aggressive. But sweet. Okay, so going back to Sherwin-Williams, if we tap into the tap in there, a little bit of a rip on the day, which is fine. We're trying to work on increasing our risk to reward ratio. That's kind of something we work on. So on these ones that trigger and there's a nice little healthy pullback inside of that, we want to go ahead and set ourselves up to take those. But obviously our stop out's going to be up here. We'll go ahead and set it up here, right at the level. So if it breaks above that level, we'll go ahead and let it go. But if it doesn't, then yeah. And it's supposed to be a red. Go on to the top here. Cool. We'll get rid of this guy so we can kind of see what we're doing a little bit. But yeah, reds for like all there, and then we'll also put in this level right here for that major pivot for continuity's sake there. some rotation. But yeah, and then we'll go ahead and move this to its appropriate level. Sweet. Yeah, Sherwin-Williams to the downside, even though it's kind of currently the stock's pumping up right now. We'll just hold that. If it gets stopped out, it gets stopped out. But that means that we entered essentially where the break was instead of buying it down here. So hopefully we get a little break retest and fail. But we'll see how it plays out. Got it for 25 days. See how the Qs and the SPY are doing. Probably not so hot. Yeah, it's probably going to be selling off here, which makes sense considering that the market sentiment overall is negative, extremely bearish. That doesn't mean the price is necessarily bearish. It hasn't really gone anywhere new as regards to its rotation. Look, we are, above 515, right? And the high was 530. So we're talking about 539, excuse me. So 539 is essentially 540, and we've kind of sold off to 515. Everyone is woe is me with the speculations, but the reality is this is trade what we see. And we're seeing that, you're coming into this rotational zone. And we'll see if buyers step in to buy this market. SPY, very similar story. It is also pulling back. Very, very thick setup candle. I guess you could say last Friday, massive drop in the market on Friday, and the SPY is doing kind of the same thing that the Q is doing, or vice versa, however you want to slice it. I'm more inclined to believe that if most of the Mag 7 are like tech sector stocks, then I think that the Qs are actually driving the market, and SPY is along for the ride there. That's just how I think when you think of market share. Yeah, but VIX being a whopping 19, you can go look at that. Yeah, and getting into that 20 to 23 territory. So well within the range of these pullback spikes for the VIX. So I'm not like, that's what I'm saying. I'm not you see any like major pullback because the market knows that it's extended. They're like, well, is there more on top of this extension? I was like, well, it's already extended to the upside. It's already extended. So any pullback is pulling back to its average. So let's worry about it pulling back first, and then once you start seeing what you're supposed to be seeing, which is, okay, are we in a downtrend? Are we below the 8? Are we below the 21? Are we approaching 200 period moving average? Are we breaking below and retesting averages? Are we breaking below major key levels and then testing them? When you look at let me bring the weekly to the front of the classroom, right? Think big picture. Is that happening? Have we broken below the next lowest level and then retested and started to fail? No, we are in the moving average cloud. As you can see here, market recovered. Remember, we even through this whole process when it was pulling back, we're like, okay, this could be it. Are we going to recover from here? Are we going to keep breaking key levels, break retest failures? That's what we're looking for, right? Just kind of go back to what you've been trained on. Are we getting break retest failures? Hopefully that's what we're trying to see in the Sherwin-Williams here. You get a break to the downside, you get a retest, and you're looking for a failure. So we're watching as it reacts to this level, right? It breaks, it's topping around here, building orders. It fails, retest yesterday, and pre-market pushed down. Now it's testing this level again, but it's already kind of getting rejected. Already we saw it get rejected once off this level, so we'll see if it gets rejected again off this level. Might not, but that's why we have a stop. We're protected above 353. If it fails, awesome. If it breaks our stop loss, we've already set our risk accordingly. So it's not as if it's not as if we're not prepared either way. That's the point. Yeah, so Tesla, right out of Tesla, it did take a beating. Never really manifested to the upside. And now if we start to see, this is what I'm talking about. You get a break retest failure. You get a break, the retest of a key level, and then it starts to reject off of that. Then you know, like, okay, well, this is not the area we want to be in. But if you're not seeing stuff like that, then just wait for it to confirm it. Don't speculate on it unless you know something that we don't. And some people do. But the reality is if it's breaking and it's retesting and you start to see it fail, then you can say, okay, we're in trouble. This is a downtrend. We're because it could break, test, and then bounce, and then we all look goofy, right? So break, retest, failure. We even call that out on the Tesla trades. Like, hey, the only issue we're gonna have if we take this buy is a retest of this level and a failure, but we'll take that risk for Tesla being in an uptrend. And then we had a plan to get out when it didn't manifest. That is trading. That's a good trade. Most people don't think that that's a good trade, but that, believe it or not, is a good trade. Now you could make the argument that, oh, you could have waited, and I think we even said that in our analysis. You could have waited till it broke this. Well, it did break. It did break it. It's not perfect, and then what did it do? Still fail. So the beautiful part is as long as you have a plan to know what it could do, the if thens are there, you made a good trade. Now it's not a profitable trade, but you did make a good trade because we don't have crystal balls here. Google doing something a little similar, kind of breaking here, and then just kind of failing through to the next key level. So we can go over to the daily chart, see how the good old Google's doing. Just kind of basically, when you see this gap, this is a retest right here. This one candle is a retest before the slap to the downside. Okay. So right here on earnings, boom, gap down, nice little test of that level, and then failure. Okay. Common theme that you see in the market all the time. All the time. You see it all the time in the market. So it's a good setup to watch out for. Nice break retest setup. What else do we got? Some Morgan Stanley. We can go look at some of Morgan Stanley and Goldman Sachs that we were looking at. Right, break retest there as well, and then failure. You could go Goldman Sachs. Not so much Goldman Sachs. We're gonna put the pivot levels in there. Boom. Right, look at that. And then we'll go ahead and pop the one at highs there. Bring those to the front of the classroom. Sweet. So, yeah, this is kind of what you want to see if things are going to continue to the upside. You get a nice push down and then reaction with your edge. Boom, push back to the pivot. But it tested this level, didn't break it and retest. It's tapping it and respecting it. It's kind of what you want to see. That is what you want to see, I should say. And then you just gotta kind of be patient for some follow through. All right, Russell looking kind of very similar. This is probably going to be the weakest of the major indices. Mr. Russell, he is on balanced volume currently, pushing to the downside as well as a neutral 21, respecting that failure at 226.62. Remember, I told you guys this is the level to watch out for. Major head and shoulders look here, and you're seeing it kind of start to fail. So it's just a very broad shoulder for sure on this side, and then a narrow one on that side. Yeah, but watch out for the Russell there. So shout out to Apple for showing strength there. Now we did take a play in Apple, a very healthy pullback, spurred on by a setup candle here getting washed, and then a nice rip where we rolled it a couple of times, closed it out. And then it did continue after setting in and settling at this 226. So it did actually end up pushing higher, but we had already rolled it pretty high. So letting it go is within our framework mentally for us to say, hey, we're not, breaking our rules here. We're keeping our rules no matter what. Makes us better than the animals is the rules. But you essentially see very violent drops and pushes. 3 weeks of violent pushing, 3 weeks followed by a week of drop, and then 3 weeks of violent pushing. So it's telling its own story here. It's doing its thing. But the reality is how do you play that? Well, we play that the same way. As an uptrend and pullback, we took the buy, we reaped the reward for that. Really good play on Apple there. See if we have any in plays down here. Close this. New kids on the block. Nothing developing. Let's go look at some SoFi. She's been quiet. Yeah, so SoFi coming down to this key level here. I was looking at it the other day. I was like, man, we get some pullback in SoFi. Maybe a setup candle would be pretty sweet. And we don't have to necessarily wait for a setup candle. Let's say, for example, it might not be outsized, but if it's something that you want to get into and you see that it's respecting, you could say, okay, well, this is putting enough risk to it, have a risk to reward. I just trigger, let me know when you're setting up to push to the upside. And you just put an alert there and say, hey, okay, cool. My risk is defined. Stop out at the low. I'll take the buy. The closer you get, cool, but you also increase the likelihood of you getting stopped out if it peak a boost to the downside. So you could drop your alert down here. You could say, if it breaks above this one, cool. But if it's that tight, you increase your risk of getting stopped out because it has less wiggle room. Personally, put that there. Go back and look at that. So yeah, man. Downtrend. Broke that and then slammed to the downside. Didn't even bother to stop and test this level. Just went straight here. Yes, this is earnings, but to the point, right? We really want to bring home to you what the mechanics are here. If you're in a downtrend, defined downtrend, right? And it kind of sets up to the upside. Once the move's already happened, and there's some buyers they're late to the move, a lot of them. The market, right, will look to trap those traders. They will look to trap those buyers. They will look to trap them. And what do they mean by trap? If they see you come in late to a position, they see you coming late. This move, let's bring it to the front of the classroom. Get rid of this. This move in O started from the 3 ATR. That's where the buying or a bulk of the buying started to happen. Push, right? Pushing the whole time. Pretty much. Goes sideways for a little bit, then pushes, right? Sets, seller step in, buyer step back in. That means this move at maximum started here and got reinvigorated here for the next 3 weeks. If you see a 3-week move, that's a pretty powerful move, right? Most pushes on average are about 3 weeks. Okay. So if you get an outsized candle here at the end of a 3-week move, kind of away from the moving averages, after you've been buying since down here, you've already made your money. If you're a buyer down here and it gets up here, you already made your money. So if you continue to see outsized candles to the upside, buying to the upside, right, and it crosses below or gets close to breaking below the low, right? These people are gonna be like, oh man, I got in late. They're gonna have that idea in their mind, coupled with the individuals that were still in down here, like, oh man, I don't want to see my juicy profits go. Let me just pull it. So the momentum starts to shift at that point. Okay, and it slams it one way or the other. It happens time and time and time and time again. That's why volume is so very important in a market. You cannot exist, I believe, as a trader and not bring volume to the front of the class for cornerstone of it, whether it's order flow or volume profile or even this, just seeing when is volume above average at key levels, right? That is very powerful or potent for you to be a proper trader. You have to take into account volume and see, well, okay, this is when it's working. This is when it's a dud. Okay, you see volume Spiron moves several times on this channel, right? Call out major pivots, call out major continuations, all that. So stuff to keep in mind. Stuff to keep in mind for sure. Have anything else on the message board? So you kind of talked about Bitcoin, GBTC. Let's go take a look. Definitely a buying opportunity in Bitcoin for sure. Buying opportunity for Bitcoin for sure. So one thing I do notice too is that when things are speculative, stuff like Bitcoin is like the first thing to go, right? Super volatile, super violent. Also, you got crypto winter coming up at the end of, I think it's kind of towards the middle to the end of this year. So the buying opportunity for cryptos are going to abound, if you believe the analysts, moving forward. Now, contrast that to GC all-time highs, relative to all-time highs, right? Relative all-time highs. So there is real angst in the market about inflation. This would be a preservation of purchasing power at all-time highs of 29.7 an ounce. 29.70 an ounce, excuse me. Definitely something to look at, right? We can also take a look at silver. This is really where the play is, in my humble opinion, because silver can really get cranking. People have cornered the silver market before, so it's not as if you can't corner it again, or a lot of people see that gold is a little too extended, but silver being more affordable, more leverageable, and when people really step in, you can kind of corner this silver market, and you're resting currently at on the moving averages, right? Kind of trending sideways. So you can see this as, okay, yeah, it's going up, but right now, relative to what gold's doing, this is trending sideways. Whereas the gold is at a very strong uptrend, very strong uptrend, testing multiple times, 3 times its average true range. So you could say, okay, well, gold is a better buy because of the trend, right? But you mean you're late. So if you're late, then waiting for a pullback is advantageous for you. Now, because the secret's out, are you going to get a major pullback? Well, probably not. So the better play is, if you're late, look for a pullback, right? Wait for a pullback, see if you can cross below the 8, get into moving average cloud, whatever. But the play is the one that no one's really looking at, the one that's kind of like how Bitcoin and Ethereum kind of move together. Well, gold and silver kind of do similar market action. One might lead, and the other one you're like, ooh, I don't like that. But Ethereum might be the next. Of course, SRE's in play. Yeah, we kind of saw that. And that's why we have the system, to make sure you get out of the way of stuff like that. But we had one to the downside, one to the upside. It just opened down here. It opened down here. SRE. It was really unfortunate. We were hoping it to the upside, but either way, it was going to be a rip, right? Maybe we could have put a straddle on, look at it. Oh, it could be a straddle. Original analysis of the downside. What do they say? Your first choice is usually your best. Is usually the right one when you take tests. Yeah. What else we got on this message board here? SRE, already looked at that one. Bitcoin, looked at that one. What else we got? HD, kind of talked about that a little bit. Uh, yeah, sweet. So, but yeah, yeah. If you guys have any questions, drop them in the comment list. What we're really doing is just bringing to the front of the classroom things that are that we see. Don't buy into the hype too much. Just take action and be prepared. That doesn't mean, sell everything and, call it a day. That means, take action and be prepared. So just like here, Sherwin Williams, look like we're about to get stopped out on this bad boy, right? But we're prepared for it. So if it gets up here, we're stopped out. We got in, retest, didn't fail. Looked like it wanted to, but it just said, nope. I'm here to play, and it's been buying all day. We'll see if it stops us out. If it does, you guys already know what we're gonna do. But thank you guys for tapping in with us today. It's MC Fire, and we'll catch you guys on the flip side. Peace.